Boom. We are alive, ladies and gentlemen. Thanks for joining us today. I really wish I got yesterday's episode out before the internet gods decided to just cut me off. The jungle has so many beautiful rewards, but sometimes nature itself just has its own plans, and technology is here to help us combat against it, but doesn't always win. So I made a video a few days ago talking about how bigger players are actually already in profit taking, and I got a lot of flack for that. And a lot of people like, retail's not even here. The bull market's got so much higher. Why would people be selling now? Is in comparison with just making sure they get maximum profits. And I found a few charts that I wanted to share that I thought was valuable. And also in that time, Bitcoin's prices dropped near 10%. And some other assets are starting to form things that look like they could be distribution. Now, it doesn't mean that they are yet. And I'm also going to share with you why there has been many mid-cycle distributions before the final peaks of the bull market kick off. So we're going to start actually by taking a look at some charts I found from Glassnode this morning, because I thought they helped reiterate the idea that I was talking about, which is how I feel profit taking by the larger players often kind of plays out. So the first one I wanted to go over was this Glassnode chart here. Now this is effectively long-term versus short-term holder. So in red, you have short-term holders and the increase of those, and in blue, the long-term holders. Now it's kind of simplified to some degree, obviously. But for what I wanted to point out here was this area here. We talked about when larger players started to take profit and what that looked like effectively. And here you have the kind of crossover. Now, much of the profits for the early, many big profits started taking as soon as Bitcoin's price goes up. And you can see in the long-term holder, I'll zoom in a little bit more here, the long-term holder in blue crosses over and starts to decline dramatically as the price goes up. And that's what the big long-term holders are doing. They're taking prices as the price goes up. Now, this is kind of counterintuitive to think, right? So retail effectively has kind of already shown up. As soon as again, what's interesting here is we don't have past 2019 in this data. They kind of max us out at 5 years here on this y-axis for this chart. But the important thing I wanted to note was, again, the crossover. Now, I don't think that the bull market is over. I think that there's still more upcycle to come. And I think the distributions that we're about to look at are going to be temporary and align with a new accumulation range for Bitcoin being built at the moment. So what that is exactly, time will give us a pretty near idea, but it's likely that there's a spring coming. So some kind of peak fear in our marketplace during the bull market where prices will drop, but still absorption will occur and the price will continue upwards. But I just wanted to show you how far along in the bull market we are when the bigger players are already starting to sell, because there's a huge amount of profit taking, especially with the ETFs, for example. A traditional ETF, if you get 3% returns in a year, you're fucking laughing. So if some of these money managers have just gone up 50% on their Bitcoin ETFs for some of their clients, that's 10 times higher than they would normally get. And that's huge. So I suspect that the profit-taking mentality of the ETF players is also different. It doesn't strike me for any particular reason that an ETF holder of Bitcoin would be like a Bitcoin maximalist, right? They want profits in US dollars so that they can spend. Now, I think there will be a time in the future where Bitcoin is now the denominated currency of funds of the future, but that's not today. And although this bull market is not done today, I think we're going to see some consolidation. And I wanted to, again, point out and share what I thought, there we go. What I thought was kind of taking place here. So I thought this was a really nice one by Glassnode. Again, it shows as soon as the price started to go up in 2021, the majority of the large holders started to sell. And even by 55,000, 40,000, you had reduced the number of long-term holders almost by half. And then again, most of the long-term holders are out. Now, the interesting thing here is that long-term holders actually started to reaccumulate again near the $31,000 Bitcoin price. I think a lot of us, myself included, thought that we were going to see more of a floor around 31,000. Again, there was clearly way more leverage, trading and players in the space than we had taken account for, and then this sharp drop into 15,000. But nonetheless, most of the long-term holders again started to reaccumulate back around $30,000, and then slowly started to rise up. Now again, we're seeing as we actually there is more data here. Excuse me. There we go. That's a bit nicer. My bad. Glassnode, just haven't used it in a while. Here again, we can see as price goes up, long-term holders start selling dramatically. And it occurs before the bull market ends, clearly, because they want to take profit into the strength every time. Here, you have nice long drawn-out areas again where short-term holders were basically at an all-time low. And again, you can see the inflection point of these where all the big whales are selling into the new retail joining. And here we are again into the movement upwards, again, at the same point as retail starts joining in red, retail in red, whale in blue. As retail starts joining, whales start selling, right? So where are we now in comparison? About halfway through. Now, before the previous bull market really took off, we did see this upwards momentum before a consolidation moment took place with a secondary accumulation range. And I suspect that we're going to see a variation of this here, that we could see a pause in terms of the short-term holders as price comes down here for a little bit. I don't know how low, but I'm going to make some conjecture about that near the end of this video as we look at Bitcoin's price. So just stick around for the rest of my rant here. I'm going to make sure the live stream is going smoothly. Iris says Mercury retrograde today. Oh, a few of you have made some great comments too here, is that this is just another opportunity, and that is correct. Or one last gift, Rich Johnson also said, this is again probably just a midterm reaccumulation and distribution looks like it's starting to occur here, at least for some. But we'll go into that deeper in a moment. But for now, again, notice that as soon as price starts moving up here, let's look at the price cycle for 2013. This is where we started our Bitcoin YouTube Arcane Bear channel, and you can see long-term holders selling around $3,500, $5,000, $6,000, $7,000, $12,000, and then massive. All of a sudden, as we went above that, massively the whales started to sell, retail started to join, and at the inflection point, most of the whales, the long-term holders, were done. You started to see an accumulation of long-term holders here again. Long-term holders and retail switched hands until you got this inflection point again. But notice here, even the whales were mostly back in at around $6,000, and then you see a very slow rise here as prices dropped because people were very unsure. So there is this process that takes place where, again, once the market cycle was above $9,000, basically profits were being taken by the big holders. Retail in red starts joining, profit taking. Almost all of the whales are totally out of their position here by $40,000 to $50,000. It goes into long-term hands as retail capitulates over. And again, where we are today, where we haven't seen this massive move upwards, but we're about halfway through. So I suspect, again, this is why we're going to see a consolidation right at the backup phase of Bitcoin here. Now, it could be quite volatile. There's not a lot of Bitcoin on the exchanges. The ETFs have added a ton amount of liquidity. That brings us to one of the next charts I wanted to look at again here too, which is another variation of long-term holders for Bitcoin. So let's just zoom in on the previous market cycle versus where we are today. So what do you notice? Now, primarily there's these large dips down. So this is the long-term holder versus short-term holder supply ratio. So at around $40,000, we started to flip. We flipped from long-term holders into short-term holders' hands. And this is one of the steepest rates of change, probably again due to the ETF, GBTC being able to sell the majority of their stocks, the majority of their shares, when they couldn't before. A lot of just pent-up kind of selling pressure from those two. But again, if you look in the previous cycle here, you see these very steep drawdowns as price goes up in long-term to short-term holder. And this is one of the steepest. Again, if you compare the cycle we're in now to the previous Bitcoin cycle high, it's actually steeper and almost further in exchange. Now, again, this could be because of ETFs, as we know. But again, here, this steep decline here usually was marking somewhat of a top. Now, we haven't seen it flatten out or turn around yet. It's still in steep decline, which again, I suspect that we're going to see further steep decline of this as the bull market continues. But I just suspect a little bit of reprieve here, maybe something similar to what we saw in the 2018 to 2019. I don't think it's going to be this big, but this is where I'm going to take a look at it now with Bitcoin's price. So we had talked about this previously. We're up at the top of the range. For Bitcoin, oh, here we go, back to the chart. The main area of interest is kind of around 48 to 52,000. That's the previous band of resistance that could look to be support. Now, part of the question is, do we see something bigger like this? And I've talked about this in a few videos where maybe there's a backup phase coming. Again, it still leads to bullish momentum in the long term, but Fetch did something that made me want to strike a little bit of caution. So here's Fetch, okay? Fetch, since its accumulation cycle, has already gone up in the first round 10x, retraced 70 to 80% of that, and then gone up another 10x. And Fetch has done this before, yeah, almost 14x since the accumulation. So if we look at Fetch's previous cycle, we ignore where we are now, and we go back to 2020, Fetch did this more than once. Fetch went from the bottom of its accumulation range, went up 5 to 10x, depending on where you entered in that accumulation range, dropped down 70 to 80%, formed another accumulation range, then shot up another 13x before creating a distributional trading range. So this became very important. I think this is what we might be seeing for Fetch here too. Let's go in on the 4 hour or the 2 hour. It'll make it a little bit clearer. So remember, we just had a long-term accumulation, reaccumulation for Fetch, and are now in what appears to be a new upper trading range. And the question is this distribution? And this first type of momentum against the top, where your SOS fails and becomes a backup, can sometimes come to the middle of the range, but it can also signal distribution. And this is what I've said before, is the hardest part of the market cycle is potentially this one. And it's the ability to tell the difference between Wyckoff accumulation and Wyckoff distribution. So here we are. Here's some of our, again, accumulation is usually long-term, 200 to 500 days of an accumulation cycle. Reaccumulation ranges come after the long-term accumulation cycle is completed. These are the first fingerprints of our market maker that should give us the reduced volatility, which is another one we're going to look at, the reduced volatility within a range as well. And then we have distribution, which usually comes after reaccumulations. So for Fetch, we've seen accumulation, reaccumulation, and now likely in distribution. So we've followed all of these steps each of the way, right? We got this one right, got this one right, this one right, this one right. And now, actually this last one was kind of confusing because I thought this could be distribution as well. But this bottom liquidity check happened so quickly. It was basically, I didn't even have time to look at the screen or notice that anything had changed in Fetch's price here before it returned right back to where it was. So this, where we are now, this top touch often equates to often, but not always, often. Oh no, I didn't link it in here. I'm gonna have to go in and update the website, sorry. These distribution schematics where we get up to the top, we fall back into the trading range and then go much lower. So again, Fetch did this in its previous market cycle, and we're gonna reverse history here. We're gonna keep it linear because that's where the best kind of time frame functions we'll get here are. Yes, and here we go. This is the run up of the previous cycle. kind of similar, with lots of liquidity comes in. This reaccumulation could be perceived as distribution, which is similar to what I said with the previous market cycle for Fetch. It continues up another few 100%, blowing everyone's mind. And then here, this is actually a really, really nice kind of inverse head and shoulders, which is a bearish signal on the top of the distributional range. Once we couldn't get back up above and into the range here, we closed down, tried it one more time with a lot of fervor as well. Again, this is almost spectacular to see the fact that you fall out of the trading range by 40%, and then at the very bottom of these little like tweezer accumulations, shoot back up, so, and another 80%. So I suspect that we might be here. Now, again, it's not confirmed yet. We have to wait for confirmations. But the general question now is Fetch the canary in the coal mine? Are we witnessing the kind of an inflection point? Again, since January 2023, in case you didn't know, Fetch is up 42 times. So for people to be like, we're not in the bull market, it's going to go higher, it's already up 42x. Okay. People like, the bull market's not even started yet. How can something be up 42x and the bull market not started? Those two things don't go together effectively. We are in profit taking areas. I mean, we see supply decreasing on the as we go up here. Not a great sign. The majority of the supply that was accumulated at this price. Fetch has some other areas that, again, makes it a bit more interesting in terms of what could happen next. We saw the ASI token data come out recently where, just for a quick update, once approved, Fetch is rebranded to ASI with an increase of 1.4 billion tokens added to the supply due to the migration of Ocean and AGIX tokens at a conversion rate of 0.433, effectively to 1 for each of those. So they'll take up the remainder of that supply, as Fetch is basically, again, as we see down here, Fetch is only currently 1.15 billion tokens. Ocean was 1.14 and AGIX was 2, more or less. This was due to the 15-day rolling average of prices here. So with this on the table, the confusion about what's going to come next, this merger of tokens and companies, which we just really haven't seen in the market before. First off, there's two things to note. Number one, this is a trend towards conglomerates. We know that if a company in the crypto space wants to be competitive with the likes of ChatGPT and OpenAI, they're going to need to work together, and they're going to need to overcome a ton of boundaries in terms of where they're at the moment. So I think this is a buy the rumor, sell the news type of idea. And with the current charts that we're seeing over here for Fetch as well, I think we're witnessing distribution. Now, it's too early to tell. I thought something similar of Bitcoin was happening, so we're going to have to wait because we've seen these moments where they do come to springs too. So we're going to need to keep a really close eye on the horizontal trading ranges. But just at the moment, with how high we are, up 42x in just a year for Fetch, news on the horizon. Is this a canary in the coal mine? Fetch led us through this market cycle to begin with. It's been the strongest leader in everything we've been looking at. And just as a side point, with Solana as well, we've seen at least 2 really strong reaccumulation patterns outside of the box with no large retracement. I mean, even for this drop here, only 30 to 40%. Yeah, I think this, again, just in short, this represents an opportunity. If it is distribution, it just means there's going to be a new time to find better entries for things. I'm going to remain cautious here. In terms of what the market cycle is going to do, especially because, let's see, Link here as well. Very kind of jagged trading range to get up to this point. 2 reaccumulation ranges already, and our breakup into what we thought was going to be the SOS has been pretty slow going. Now, Link in itself has been kind of confusing. Like, this is some of the dirtiest trading ranges I've ever seen, but this looks like a distributional top. It would be really nice to see a backup phase of some kind that maybe, again, forms some larger trading range that we're just not privy to at the moment. But yeah, I remain cautious here, and I think Fetch is going to give us a lot of that data. If Fetch starts to break down here considerably, I think many other things will too. I think Fetch just has a really clean footprint due to the extraordinarily high volatility of the token, and there's just nothing in our basket that's performed that well in the last year. Again, from the first case, you're up 40x already, which is just astronomical. And then again, from Solana, you've had a nice accumulation, your first SOS and LPS phases. Again, the instinct again is that we're just going to go higher. We're going to go new all-time highs. But with where Bitcoin's been before, where I think we're at right now, oh yeah, here we go. This is the closer look of Bitcoin I wanted to finish too. So Bitcoin appears to be in this trading range right above the rising widening megaphone we've been following. This is what I would like to see. This would be nice. Some type of spring that wicks us down maybe as low as $52,000, $49,000. Wicks get crazy at this moment. I suspect that this draws us out and past the halving, so that we see volatility going into the halving, which starts to confuse people. Oh my God, I thought this was supposed to be more bullish than ever. Bitcoin's price is higher than ever. But before the halving, why is it going down now into the halving, etc.? And it'll probably even stay lower past the halving just to really fuck with everybody. We'll see there from a test, a breakout, and a move upwards. So that's kind of my current speculation, again, is that we are in what will become a larger, almost fucking perfect reaccumulation channel for Bitcoin. We saw it with Solana, and I think we saw it with Avalanche, we saw it with Fetch, we saw it with Link. We haven't seen it with Bitcoin yet, and I suspect that that's what's going to happen. It's going to give a lot of breathing room for the other tokens. We're going to see maybe our first little chunks of supply downwards here, like, another 40% drop or something like this. Again, remembering that we charted already 2 perfect reaccumulation channels. Why I suspect that we're going to get a third. So I think this is the question: is this distribution starting? And it's just temporary, a temporary distribution, not full scale range distribution back into bear market, just temporary distribution. And we've seen that many times before, where the market cycle goes up, down, and has these really. Even with just Fetch alone here, you had up 10x, down 80%, up 10x, down 80%, up another 10x, and then down 80%, 90%. So that was 3 times the market cycle went up 10x, down 80% in one bull market. Okay. So and we haven't seen any down towards, rather we've seen one down towards 80% for Fetch here. And at 60 to 70% in this market cycle. So it just feels like another one's coming, and Fetch at the moment because it's been the leader of the pack, might be our canary in a coal mine. Not saying that it is yet, but just to be cautious. As you can see here, I've added some blue to the green here. It could go yellow or orange. Again, we're not near the end of the distributional cycle. The price is still going to go up, but I wanted to make this kind of visual representation that everyone has seen, is that as the price starts to increase, whales are taking profits every step along this way. And in fact, the whales are almost fully out of their positions by the time we get to new all-time highs, because liquidity is so thin at that particular moment. So everyone that's telling you just wait till the very end, you're going to be able to get out at the very top. If you don't have a lot of capital in the market, that's true. You can wait till the very end. You can go out at the very top. But the bigger players who move the market are exiting already. And that's what we see here again today, is the blue has been dropping significantly since around 35,000. Pink has been increasing, and the demand shift between retail and whales is changing. And this there's actually this chart as well. Again, the gold here, you can see this very sharp decrease of long-term to short-term holder supply. And again, this is the sharpest decrease that this has had in the cycles, likely to do with the ETFs. And again, I just don't think, philosophically speaking, ETF holders are going to be Bitcoin maximalists. They're looking for profits, and many of those money managers have gotten more profits in a short duration of time than the S&P 500 has produced over the course of the last 5 years. So they'll be looking to go, great, what an awesome year, and clock out. There's one more chart I wanted to, there's this long-term holder supplies decreased massively. There's one more one I wanted to share from Glassnode, largely around market volatility, and then I was done with some of the data that they had dropped. It was just here we go. Here's a revisit of this this chart we were just looking at, where distinct transition from long-term hodling to distribution and profit taking on the all-time high break. So again, in the previous market cycle, as soon as the previous all-time high started to break, profit taking was ensuing on the long-term holders. So again, just remember, that's how the big players have to play, because if they can't sell it all at once at the top, they would just they wouldn't get out of the market. They wouldn't be able to get out of the market. So they get out of the market as the market is going up and shift into retail hand or short-term holders on this particular case. It was not the one I wanted to show, though. There was this divergence in volatility. This was kind of a fun one. And again, it's not that the bull market is over, it's just that the profit taking has already shifted. So here we see in green kind of a peak of volatility at the top of the price. At that point, the green has already outpaced both the yellow and the blue. So these are variations of how long the annualized realized volatility. That's an interesting way to say it. Annualized realized annual volatility, I think, is probably. I guess it's anyways unimportant for this particular sentiment. Again, we see that we're already moving towards a big upcycle. Now, again, it looks pretty dramatic here in the previous moves upwards, and also in 2017. Look, big sharp increases of volatility annualized and a return back to blue multiple times. So increased return to blue, increased return to blue, and yellow here. So we haven't had that increase in a return yet. We've had one, you could maybe say two here at the bottom, an increase of the green, not able to break above. Although this is a pretty nice trend shift of annual volatility here, I think, too. This is where also we became the most bullish, was right around October, just because the market cycle's volatility to the downside was basically gone. So now that we're up higher, again, just more reason to believe that the volatility could turn around and come retest this blue line here. I'm not saying it's going to today, but just to keep an eye on it because of what we're seeing in some of the other areas. Again, like this one here was a nice one by Glassnode, just the steepest increase in the long-term holder to short-term holder in any of the markets cycles, basically. So something to keep in mind. Just for fun, we'll kind of finish off the conversation with here as well. So in through multiple accumulations, distribution, at least one accumulation and distribution to accumulation, reaccumulation, awaiting the potential for distribution here for Fetch. I think this is the one to keep an eye on. Solana also, again, out of its accumulation, had its backup phase, SOS, LPS, and SOS and LPS. Now, does this LPS become the further breakout? And again, I think that the LPS here turns into intermediary distribution, draws a new kind of trading range for accumulation with more volatility, and then goes up for one last cycle up move. So keep that in mind. Look at the volatility here in LF02 all the way back to the bottom, basically. So lots going on. Wait, I wanted to put my Solana chart back there. Ethereum as well, I think, is going to be somewhat similar to Bitcoin. I think it's already showing us right now where that trading range is going to take place. I think this is an SOS, LPS. I think we're going to see new all-time highs, but again, that means we could wick back down to like 2,700 for Ethereum before finishing this reaccumulation range and moving higher. So I think Bitcoin and Ethereum are going to do something similar here. I don't think that Ethereum is going to outperform Bitcoin this cycle. It looks like it could have, but there's just so much absorption of supply at this moment from the previous market cycle, I think, because in our previous market cycle, we had such tremendous growth from like $300 to 4,700. That's 3,000%. So I think right now, just a lot of this as accumulation of supply has been largely in to that previous price ranges effectively, because it's very, very thin in comparison with how much supply moved in and out of the market in the previous cycle. Again, not to say I don't think the bull market is over, just that at least at this moment, the likelihood of this accumulation range turning into having something that has a spring downwards of 52,000, 49,000 before continuing up higher makes the most sense. Which again, this was a really small on the 2-hour distributional range. So yeah, volatility ahead. Keep that in mind. Let's see. Any thoughts or questions? Let's go back actually to this data here. I thought this was a fun piece from Glassnode. Well, I look at your guys' questions so you can kind of pontificate on that screen. Why did I just get an ad in the middle of the stream? Oh yeah, I turned the ads back on for YouTube. I just wanted to see if it made a difference in how many people watch the streams. I had them turned off for years, or the last 3 years, basically since 2020. And the YouTube channel just hasn't grown at all. So I started putting the ads back in about a week ago to see if it changed the amount of viewers that YouTube was feeding it to, because I figure they might care if they're making money off streams or not. Not just do I care about advertising, but does YouTube? And the answer was yes. So I figured we try it out. So far, it has not yet made that difference. So maybe we'll turn them back off. But for now, I've turned them on to see if it would help. Bitcoin going to fall badly because of outflows. Oh yeah, actually there's some other charts here. Thanks for reminding me. The spot BTC ETF outflows here, I think are fun. Okay, so here we go. You can see the last month of ETF in and outflows have actually been quite dramatic, and then the last week, silence from inflows. Now that's probably because it's Easter weekend. It's a holiday around the world for many people. So you could assume that some of this has to do with vacationing, and profit taking ends up going somewhere. People buying stuff, doing things. The total GBTC outflow eclipsed the inflows, and actually outflows have eclipsed inflows. And for the first time, you saw spot or BITB negative 731 million. So as you can see, BITB is in red here. Now they didn't have a whole lot to begin with. As you can see, they were not always, but there's one of their bigger buys on the first day. But the fact that they've started selling already when they're one of the smallest accumulators. Now the majority of the accumulation again is still moving into IBIT, which is, I think that's Grayscale and FBTC. I'd have to circle back here and check. But again, this last week, you see pretty much only outflows. So we'll want to keep an eye to see if we see more outflows than inflows for Bitcoin on the ETFs here as well. Let's see if there's some more data we can ping up here for a second. Yeah. Okay. Yeah, so we've had some larger net outflows the last little while. I don't think this is actually as up to date with the data. Yeah, Grayscale again holding the majority. They're at 22 billion, although BlackRock has caught up and accumulated almost as much as Grayscale in the blink of an eye. Okay, so that's IBIT is BlackRock and Fidelity is FBTC. I kind of like that, FBTC. That's pretty funny. But just to find clarity there, IBIT is BlackRock and FBTC is Fidelity. Again, a large absorption. This is another kind of fun visual interpretation here as well. You can see the accumulation of Bitcoin has gone kind of flat and not expanded, although for BlackRock it was just immense amount of Bitcoin accumulated. This is going to add volatility to the market one way or another, and again, how much profits they want to take here we haven't really seen yet, and it might be more than we think. So just a caution, I guess, here. Still, bull market is on its way, but we're going to really want to keep an eye on this trading range to see if they hold. So that's about it. That's about the only update. Arcane Bear, do you have any educational content to watch? All of our educational stuff is done through our newsletter and our private group, and the study of Wyckoff trading ranges, because that's been the most productive, consistent way to observe the markets. Now, it's much easier to find a market bottom than it is to find a market top, from what I've understood. KK says, I subscribed a few years back, then noticed the last week I was unsubbed. Yeah, I think my channel's been stuck at 50,000 subscribers for like 4 years, since 2018. And it was a very noticeable moment in time where all of a sudden everything was going up. All of the numbers were going up. And then all of a sudden, like, it was like a light switch was turned off and everything went down. All the views went down. We got basically silenced on YouTube. And I have not been able to grow since then. Now, I could just say I've creating shitty content, but nothing changed from the content I was first creating. And many of my first videos were in the hundreds of thousands, 50,000 views. So I'm not sure what happened there, but I could make some guesses based off my previous interests in ivermectin. There's probably other things I've fallen into interest of that the mainstream was looking to ban right away. But anyways, that's a total side point. So that's why I was also trying the advertisements to see if YouTube maybe would like me again if they were getting money because of the streams. Anyways, if you check to see if you were unsubscribed, because YouTube has been kicking people off my channel potentially. And we're gonna start trying to doing the live stream with Rumble again too. And maybe we're just gonna do earlier in the morning, like these 9 a.m. videos my time. Because it would be fun to do it consistently and be like, hey, yeah, I do like a live stream every 3 days a week or something. But it's just been with my travel and where I like to go in the world, the internet is hyper inconsistent. So it's basically been impossible. Oh, wait, hold on. Oh, are you giving me an update about, oh yeah, thanks for that. It appears my, thanks for that. I think the HDMI inputs overheat sometimes, and then the video freezes. So thanks for that thought. I guess when we were on the charts, like, you guys couldn't really tell. It's just little face me in the corner here. So I'll leave it like that just for case. The M says, longtime follower of the channel, love your content, no shilling, but I am really curious about Virtua, GFI, any tea on there. I'm just about to end the video, so maybe not today. But if you can come back and join our live stream, I guess we'll try to do it again tomorrow at 9 a.m. We're going to keep trying until we get it right, or just switch to pre-recorded videos. Crypto Carpenter says, I wasn't getting any notifications for a few months. I actually had to go out and look for your videos. Yeah, I'm telling you, YouTube flipped a switch. They flipped a switch on us a while back. I saw it in the charts. It was an undeniably noticeable thing. I guess I could try starting, if I'm going to try starting a new YouTube channel, I'm going to call it something else. Maybe I could call it Arcane Bear Reacts and just try making other side content to see if it makes a difference. To see if the channel grows faster or if the content performs any differently as well. I mean, I don't want to give up on Arcane Bear here. That would be such a horrible thing, but they definitely put me in a sandbox and I haven't been able to figure out how to get past it in any way, shape, or form. So it would be nice. My original goal was to get to like 100,000 subscribers. So to get to 50 and be stuck here for 4 years is just so discouraging. It's not your fault though. It's fucking YouTube's fault. I know that for sure. So anyways, total side point there. Awesome. Well, we're going to leave it at that. Thanks for all for joining us today. I really appreciate your guys' support. Wait, what? I wonder how we can just, I wonder if we should just chill. I see all these YouTubers do like 2-hour-long live streams. What do you guys think happens if I just chill out and drink coffee and shit talk with you? I wonder if we can get more live viewers. Let's see if we can break the 200. I think I've been stuck at like 200 concurrent live viewers as well. Let's see what we can do to try to get to like 500. Can we get to 500 live viewers today if I just wait on YouTube? Shadow banned. Try uploading the same content from a different channel name. Yeah, I could do that. I think I'm going to have to do that. And Rumble just started wanting to try to collaborate too, so it could be an idea. It wasn't the ivermectin or COVID videos because we got banned before that. It was in 2018. It was after because I could go back and even look at I could probably look at the screen. I think I screen captured it and shared some of it on Facebook at the time. If you haven't yet, follow me on Twitter too. I think we'll start posting some of our live streams there. It's like this. Jacob Mattis says it takes a special sort just to talk to himself for the audience while he surfs the internet for 2 hours. I know. That's how I feel. Although generally that's what you see. More or less. I mean, all they're doing is looking at news, and most of news is boring nonsense. Anyways, you can summate everything that's happening in the news in a much shorter time frame just by looking at the chart. I haven't done a really long live stream for a long time either. I'm just curious to see more than anything. Not that I want you guys to like stick around and waste your time on the internet here with me. I'm just curious to see what happens if we stay on longer. Are we like, is there other numbers we're stuck at? Like, I haven't seen more than 200 concurrent live viewers either. So it'd be interesting to me, like what makes the YouTube algorithm tick. Should I just be drawing lines on the screen more randomly? There's a top of the trading range we broke down here. We still haven't found consolidation yet. Oh yeah, there's just so many indicators I can use to flash around here. Let's do that. Let's get rid of all of our drawings here for a sec. Let's turn on some of our other indicators. Ooh, look at this. For Bitcoin's Bollinger Bands, we were basically right at the bottom of the bands now too, which is nice. Again, most of our VPR support here is or at least at this current range, is down below 61,000. A massive shelf taken down here at 52,000. And again, the kind of current conception is, do we see a larger trading range that forms here? Hard to say at the moment, but definitely couldn't continue the bullish movement through with the Bollinger Band. So, and no return outside of it, and a touch right down to the bottom of it. Yeah, this trading range looks the most nominal. I think on the 6 hour it probably looks even a little clearer. Yeah, this looks the most sensible, is the current trading range that we're in. Oh, let's take a look at the bear claw. For those of you that don't know, this is a free indicator that we give away. You can, if you follow us on TradingView and look under the indicators, it's actually quite nice for trend shifts. So let's take a look and see where it's at. Yeah, both of them here together actually look quite nice. Here you can see the big trend shift for 27,000. We've stayed all the way in the green, punched through all the EMAs right to the bottom of the bands here before we popped out. Yeah, again, the bands are actually down at 56,000, and no big excess breakouts here either. This is going to be really interesting. Let's see where we're at on the 6 hour. Yeah, so this is the most volatility we've seen again since the previous ETF approval. So from approval date to now too, let's take a look at this. 50%, 60, 70%, that's huge gains for traditional market. Yeah, so profit taking into this trading range. Our 200 and 314 day moving averages are between 62 and 54 on the 6 hour, and just a little bit lower on the daily at 42. I don't think we come back all the way to 43,000. But yeah, a wick to 52,000 on a spring here and test the bottom of the EMA bands. This is what the most likely situation is in my mind before we move to the kind of final market cycle for Bitcoin. So yeah, if you go to TradingView, it's called the Bear Claw. We've got a few hundred people who like this one. Let's go. what does this do? I think if I open up this will bring us to, there's a few ones that we made way back in 2017. Bear Claw is probably my favorite. It's a remake of the Super Guppy, or what's just basically a bunch of stacked EMAs, one on top of right another. Oh, weird. It's not giving me my, my profile. Okay. Well, nonetheless, that's kind of strange. It's too bad. I wanted to open that up for you. If you own TradingView, or not, if you're not paying for it, you can still use it. They are free indicators. Just you can get them by visiting tradingview.com. I totally spelled that wrong. TradingView. Tradingview.com. Come for the view, stay for the view. Tradingview.com. There we go. Oh, it's not even logged in yet. Dang. Let's see. Can I find it here? Well, that's kind of annoying that it didn't open the first time on or close. Well, anyways, it's called the Bear Claw. You can download it for free by going to TradingView, looking under my name, and then the indicators. I'm pretty sure you can even just type in indicators. If you type in Bear Claw, I think it's popular enough that people down. Yeah, 628 likes. There we go. The Bear Claw. Can you look at it? It's still trying to load my. There we go. Scripts. Yeah, there's a few we made. The Eagle's Nest, Eagle Crossing. Mess around with those. The Eagle Nest is kind of nice. It's a variation of a time-sensitive MACD. It's pretty cool. 387, but clearly the Bear Claw one that we gave away here has the most likes. It's just stacked EMA bands. This one I had done with a few different colors. You can change the color scheme up to however you'd like, but it is pretty productive for being able to tell trend shifts. Again, notice that we could not get back above the EMA bands here before turning down, and we're at the bottom of the Bollinger Bands, but not at the bottom of the EMA. Bottom of the EMA is easily 56,000. So I think we come back down here again. I think that we see a spring and a test still. We haven't had a spring. And our spring volume should be equivalent to the first shakeout. So unless we see volume signatures that are up here, I don't think we've seen that spring yet. So I think lower, but not tons lower. I think it's just enough to scare everybody, confuse everyone through the halving. Prices go down, maybe even stay down past some of the dates of the halving, again, just to kind of confuse everybody. I think we're kind of at the bottom of today's little springy moment, but again, just want to keep a close eye on it. There's a few things that of kind of temporary trend shifts that we want to look out for. But yeah, with the EMA bands here, let's see what the MACD is doing on these larger time frames too, just for fun. I haven't used a MACD. Actually, the Eagle's Nest is a variation of the MACD. Let's use the Eagle's Nest. Haven't done that one for fucking ever. Okay. Okay, yeah, on the daily. Okay, so and on the weekly. Actually, well, the 2-day here is clearly divergent. Okay, so check this out. So 2 big sell signals came through, although I wouldn't have, again, in the bull market, the sell signal is, well, again, all sell signals, only one buy signal at that previous drop. But we have some divergence on the MACD here. So here, these previous 2 and where we are now, the fact that we're falling. So this is a exponential too. Every time you go below, let's say this yellow line here, the middle line or the purple line, the volatility starts to increase dramatically. So once you can't close above this line, downside volatility decreases dramatically. Once you cross here, it increases almost exponentially, and same with here. So once we cross this gray line here, yeah. So again, on the 6 hour, but we're about to increase the downside volatility dramatically. I think this just bodes really well with what we were just watching, that this larger trading range will become kind of the new dominant narrative, and it could wick as low as 52,000 before moving up higher. So yeah, I don't really have much more. Oh, dang. Okay, so there we go. Thank you guys. I need to put this maybe on the right hand side so it's easier to see. I don't always look over to the left. Thanks. Yeah, the screen that I use to check everything is on the left, but I'd more commonly look to the right. So maybe I'm going to move this screen over here so it's a little bit easier for me to see. Let's go back to the MACD Eagle's Nest. So this is the Eagle's Nest. Again, on the 2-day, I'll go back. I'll just revisit what I was saying. If I want to do a live stream anyways, why not? Although we're not breaking out past 200 concurrent viewers either by staying on longer, so I'm probably going to end it here. I don't want to talk for 2 hours. It's not worth it. I already gave most of the valuable data. And again, here, our Eagle's Nest, we have some divergence. And on the 6 hour, we're about to cross over to the downside, which again increases the downside volatility. I suspect that what that ends up being in terms of where we are now is, if we get rid of these, that this is a return to the bottom of this trading range. And then a pretty likely retest of the 314-day on the 6 hour, and probably the bottom of the EMA bands on the daily. Something like 0.7 here, where we totally retest the bottom of the bands. Spring, test, and then breakout. And then this massive volatility throughout the altcoin sector. But again, this just represents another opportunity. This is opportunity. The downside that's coming right now is just an opportunity for the last little bit of upside that's in the market. So great point. Hopefully that was helpful. The markets are going to go lower. Fetch might drop down significantly. We're going to keep a really close eye on that one. Volatility ahead. Appreciate you guys joining us today. Like, share the video. Hopefully that we fixed it. I'll be back tomorrow. I'm just going to do earlier live streams. Yeah, and hopefully that will help everything. Thanks for joining us today. Ciao.